Let's unpack, Jason. How can someone protect their future income? How can they do that today?
And they can do that by knowing what they can be insured for and really understand what they're making today. They call it the human life value, Jeremy. I really don't like that term, but what that stands for is math equation of how old are you today? How much do you earn, like what's your gross income, and then that's how much insurance you can carry on your body. And then once we know that, we can start looking at how do we create a system for you that when you do have more wealth in the future, you can make sure you have a place to put it where it's protected, guaranteed, and all the things we're talking about. Welcome to another episode of WealthWise Banking. I'm here, this is Jason Sipple. I'm here with my co-host, Jeremy Lee Huggins. And Jeremy, other than how you doing today, brother?
Oh man, I'm still recovering. So last week kind of talked about the fun and of getting vacation rentals up and running before Savannah's biggest party, St. Patrick's Day. So I'm still a little bit sore, a little bit sleep deprived from the week, but ready to rock and roll.
Does that mean that there's a lot of Irish folks in Savannah, or does it mean they just like to drink and party a lot?
It means that we're an open container city, and so people like to
Uh,
just stumble around drunk in public. That's what it means. It's not very fun for the most of us who live here, but economically speaking, it is a cash cow for the city.
yeah, and that just goes back to planning ahead, right? Planning ahead and being ready rather than being reactive, which is what we talk about all the time. So, what are we
Mhm.
talking about today, Jeremy? What are we getting into?
Oh, today we're talking about protecting your future income, right? And how you can do that really today. And that idea of protecting your future income, I think people are always really discussed or like focused on, I need money now, right? There's a jingle out there. I need money. I need it now. Was that the general? I think something along those lines. Anyway, people kind of don't, or they skip over the idea of needing money in the future. Or if they do want to put money into the future, they throw it into a 401k just to lock it up for 20, 30, 40 years, right? And
Yes.
that's their planning for future income. But what if there was a better way? What if there's a better way to lock in your income today, right? And that's what this episode is really about.
It is. And just a couple more things to think about there, Jeremy, and thank you for that is, people have a tendency, like we're thinking short term. We're thinking in hours and days and months, and we're not thinking in years and decades and millennia, right? We're not. So when we look at where we're at today, when you're listening to this, you might think, I'm going to make this like what I'm making today 10 years from now. But if you keep growing, if you're the builders that we're talking to, you're going to have more money. And then the second part of it is locking in a way, a system today because it might not be available in the future for some reasons we're going to get into.
Yeah, a lot of people assume that they're healthy, right? Especially high earners. I can fix that with some ibuprofen and some cold medicine, right? If I get sick, I have health insurance, but that's not necessarily true for everyone who gets older. There was a celebrity recently in the news who just died of cancer, James Vanderbeek,
Hmm.
and young man, right? Great family, and he had a ton of wealth, and it all just kind of slipped away over cancer, right? What I'm getting at here is don't make an assumption that you're always going to be healthy because money doesn't fix everything, right? No, and your habits don't necessarily fix everything. You can live a very, very healthy life and still end up sick. Just in the same way that you have the little old lady who drinks scotch every night before bed and she lives till she's 120 years old.
You're like in my brain. I was thinking about, and you know what that is actually? I've studied this a little bit, Jeremy. That is actually it is a routine. They a great book, different subject altogether. So I'm not gonna go down that rabbit hole. But folks who you hear them drinking a shot of whiskey and smoking a cigar every day, and they live well over 100. It's actually the routine. It's not they're not doing that always. It's not like they're doing that all day long every day. So anyhow, just fun facts for everyone listening.
Yeah, so let's unpack, Jason. How can someone protect their future income? How can they do that today?
Yeah, they can do that by knowing what they can be insured for, right? And really understand what they're making today. They call it the human life value, Jeremy. I really don't like that term, but what that stands for is it's a math equation of how old are you today? How much do you earn? Like what's your gross income? And then that's how much insurance you can carry on your body. And then once we know that, we can start looking at how do we create a system for you that when you do have more wealth in the future, you can make sure you have a place to put it where it's protected, guaranteed, and all the things we're talking about.
Yeah, I think another thing that shouldn't be overlooked here is this is not shopping around for homeowners insurance or car insurance or even health insurance, right? Where you're trying to get the most for the least amount of dollars. Because to Jason's point, your house it will age, your car it will age, right? Those insurance premiums they're different, but what we're talking about is income here, and this human life value that Jason talks about is probably the most fragile. And the shopping around for it, I'd rather you go ahead and just get started today rather than try to make things perfect.
And this is just a long-term conversation, right? We're still looking at what you're trying to do now in the next 10 years. But at the same time, the reason why we're talking about this is I was able, Jeremy and I have both been in this business in this business of helping people doing what we talk about all the time for less than a decade, right? Where, I had the privilege to sit with people who have been doing this for 41 years. And when I asked them, what are some of the things that you wish that you did better? This was the conversation, Jeremy. This is where this one came from. Came from a roundtable discussion of sitting there with a couple folks, Tim Yerk and a couple other folks who have been doing this for 30, 40 years. It was like the young guys in their 40s and 50s, and we had a bunch of 60s and 70-year-olds saying, "Hey, I've been doing this for 30, 40 years, and this is what I wish I did better." And this is a big thing that across the board everyone said.
Hmm. Yeah, because human life value is not, to your point, is not just a math equation, right? There is leadership involved. There is problem solving. There's what happens to my family if I'm not the one to take care of them. And this is income replacement too. If you look at the very nature of what is life insurance, it truly is its income replacement. So if something were to happen to you, what's the first thing that disappears? And I'm not just talking about money. I'm talking about stability. I'm talking about confidence. Okay, the decision making that becomes along with all of this, that human life value, it's so much more than my house burned down, I got to get a new house. No, like
Yes.
there's true loss, true loss when it comes to that. And it's devastating to have to think about your own mortality, and that's why a lot of people shy away from this conversation. But it's very, very important to understand what else are you leaving behind. And I'm not just talking about income.
And that was a beautiful, beautiful examples, right, Jeremy? This is not just a math equation. This is not just a name I don't love, human life value. It is really understanding who you are to your family, who you are to those around you, right? Your business partners. It's really understanding that do you have the systems and processes in place to have the stability to be able to speak and feel and lead with confidence. And then it, like Jeremy said, it really is, it's something where people, if they're not proactive with this is where you get blindsided,
Mhm.
right? This is where something happens and you're like, oh man, I didn't think that would happen. And we become reactive. And then you're back to being needing to go to other people who don't have your best interest at mind, somewhere else where you're going to start paying money to solve these problems versus being ready for when these problems come.
Yeah. A couple things that can affect this, right? Your human life value. Because to Jason's earlier point, or maybe you said this in a previous episode, but you do have to qualify, right? And obviously, the younger you are, the healthier you are, the easier it is to qualify. So, what are some things that they look at, Jason?
Some of the things that they're going to look at it. Well, first, before I go into the items, they're going to look into your behavior. They're going to look into your behavior financially, your behavior in life, and then your behavior when it comes to your money and your behavior when it comes to your health. Those are the areas, right? And so some of the things they're looking for, some of the things that are going to, and by the way, if you're listening, you're like, I'm too old. This can't do this. We've talked about this before, but 21, 31, 41, 51, 61, or 71 years old, you can still start the system, right? It's like the Chinese proverb, Jeremy. It's when's the best time to plant a tree, which you just planted a whole bunch last week. It was that day, but or 20 years ago, so they're done. But and then when's the second best time? When you planted 28 last week, right?
Hmm.
So, but some of the things we're gonna talk to people about, and by the way, even if you have any of these things, we can still talk. It's gonna be your blood pressure, your height, your weight, your, your are do you have anxiety medications? Have you had family history markers? Do you have autoimmune indicators? Just different medical things. And then have you had a bankruptcy? Do you have DUIs or, different criminal history? They're going to look at all of these things because at the end of the day, these mutual companies are looking for the right partners, as are you.
Yeah. And, don't self-eliminate either. I have gotten people policies who have diabetes. I have gotten people policies who have blood diseases. I have gotten people policies who have very high BMIs. Okay. What's interesting is they didn't quit, right? They didn't self eliminate and we worked through it. It was a little bit more paperwork, a little bit more work on my end. But at the end of the day, because they had the trust, because they had the faith, we were able to actually work into a solution. And one of the things that you should also understand is we can lock a lot of this in at a very cheap cost. It's through a convertible term, right? And then we take conversions and we can change that into permanence over time. So let's say that I'm in great health today, right, Jason? I'm in great health, but I don't have the capital for one of these big banking policies. I got a text message yesterday. Hey, Jeremy, I don't have the capital to move into the original policy. We've had two family loss of life and some, financial constraints. Not a big deal. Let's revisit. Our revisit was literally talking about convertible term. So we can transition this back when she's on her feet, right? Back when she's got the capital. And you don't have to do that full conversion all at once. It can happen in pieces.
Yes, and there's so many variations of especially engineering this for someone's life, but what you said is key, Jeremy. There's flexibility. And the people like you said who didn't give up, the people who saw this as what it is, they became persistent with it, right? You and that person found a solution to move forward. And when it comes to starting out where you're at for a banking policy for whole life for permanent coverage, you do what you can do now to solve the problems, and it follows the laws of wealth and all the other stuff we talked about. And simultaneously, where all these gentlemen who have been in the industry for decades now, Jeremy, they're like, I wish I would have done more convertible term when that person was insurable at 30 or 40, because you know why I know this? Because then when they came back to me, where they started, their businesses started taking off, when they had all this capital that needed to be stored somewhere and they wanted to put it in their system, we couldn't get them insured. But if we had done the super easy thing of putting a piece of convertible term to max out their human life value, they could have converted that without going back through underwriting when they were no longer insurable, right? You lock that in early.
Yeah, basically you're locking in what you said, your future income, right? If you're a Dave Ramsey disciple, buy term and invest the rest, you can still practice exactly what we preach. Go out and get the term, but make sure you're building it with a practitioner, as be my recommendation. So that way, when it's time to do the conversions into permanence, right? You run to the end of that term and you may no longer be insurable. You are set up structurally the right way to handle that difference.
Yep.
Because the one thing that Dave Ramsey doesn't point out is that term runs out. And if your health changes in the middle of that term and you don't have the ability to convert, guess what? You're SOL. All right. So you want to make sure that you're at least working with a practitioner when it comes time to even setting up the term policies because you want that flexibility. You want that peace of mind. You want that ability to convert and convert it into a proper equity building policy, a policy that's going to build equity, build cash value, build growth over time, and it'll be locked in for the rest of your life, right? That's what you want.
Yeah, I can't believe you brought Daddy Dave up. We haven't talked about him in a while. And
Yeah.
and his views and they're too backwards. I still swear that that guy has multiple whole life policies on him because, like Ernst Young says, you should have 10 to 30% of your wealth in a whole life policy. And they're not talking about what we're talking about, Jeremy, right? They're talking about just a regular old whole life because it also builds cash value as well. Back to this is when you're looking at this, think of what we're talking about. We're talking about how do you protect yourself and your family and lead for things that you don't know when they're coming. I ask Jeremy all the time, and I know he's going to get it right this time. Jeremy, what's the one thing that's guaranteed in life?
Andy,
Candy?
I'm joking. Change. Change.
Change. I like that.
Yeah.
I like that answer. Candy. Candy is guaranteed in life. But change, it's always change. And so again, these old timers, I'll call them that, they'd probably agree with it, but they would say, yeah, when people did better later on, or they finally got what we were talking about 5 years from now, because it doesn't always immediately make sense to everybody, right, Jeremy? Like it's something where if we're giving people and looking out for them in the long term, guess what? That's a lifelong partnership where everyone is taken care of, everyone is thriving, and it's just a system where you're being proactive versus reactive.
Yeah. If you're a business owner, right? If you're looking at cross purchase agreements, trying to protect the viability of your company, thinking generationally beyond you, this is something you want to look at. If you're looking at, hey, my children and my children's children and my children's children's children, right? You want to be able to lock in a lot of that while they're young and healthy. And I mean, I mentioned it on the last episode when I built that policy for that young girl, and it just started so small and turned into over $26 million, Jason. I was like, this is why I do what I do. Like
Yes.
she's now set literally for her life and probably the next 2 to 3 generations as well, just off this one policy.
As long, right, as long as the systems and process are in place for her and for everyone else that's associated with that money, right? Because it's like Willie Sutton's law, people tend to go find the money, right? And they try to get the money where it might not be theirs. Hopefully that young woman is going to be protected, but it is everything that is with the power of long-term thinking. Again, it comes down to if your income, like if you're a business owner, if your income doubles in 5 years, will your insurability? The answer, if the human life value, it would, but if something happens where you're not insurable, it won't. Right, Jeremy? It'll be what it was, and you have to qualify. So we want to lock in those amounts when you're able to.
Yeah, yeah, absolutely. Um, I think that kind of drives it home. I mean, do we got anything else you want to talk about in this episode?
No, I mean, we went longer than the roundtable discussion. It was, a 10-15 minute discussion, and it floored me what we don't know, we don't know because we haven't done it yet. And so when you're able to get around folks who have been there, the elderly, right? Well, they're not, man, I hope they're not listening to this, Jeremy. When you get around folks who have been practicing this and doing this for a long time, ask them questions, ask them what they wish they would have done differently. And then you're able yourself to better provide solutions for the folks that you're around now. So that's where this came from me, from a service perspective. Because I looked at, when we drop riders off in year 10, a lot of the times, right, for what we're creating. And the discussion was like, well, should I keep them on for 20 or 30 years? And they gave many, many examples like you and I just did today of, well, both are okay, both work, but you might want to look at that opportunity to lock it in, and instead of looking at what it costs, look at what it will give you down the line, what it protects you from, what guarantees come. So that'd be my final, as we say here. So
Yeah. I mean, if you're listening to what Jason's saying between the lines there, every one of these are unique. Your situation is unique to you. And the only way to figure out what works is to have a discussion, right? So I would encourage you, go to wealthwisebanking.com, book a call with Jason, book a call with myself. If you want both of us to show up on your call, let us know. All right. But these are highly personalized. And what matters most to you is a discussion, and we can't figure that out and build what's right until we have that appointment. Plan for the first appointment to be 5 minutes, 10 minutes or so, right? We'll just discover a little bit about who you are, what you want to do, and then we can go from there. That's it. It's easy. This is very easy.
it's simple, but it doesn't mean that. Anyhow, jump on that call, go book with us, Jeremy. As always, you're already in banking.
You're just not the banker yet.
Excellent job. See you next time. Take care, everyone. See you next episode. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control,
and keep building your legacy the wise way.